Good mythical morning, everyone. It's the one and only notorious glorious V, the Gorilla Economist, coming to you live with my main man, El Cuco himself, who's working the airwaves and making sure that this broadcast is coming out crispy and clean. He has a bottle of Don Julio's right next to him this morning, so he is fired up.
Tequila sunrise.
With that also being said, folks, check out our website, RogueNews.com. We're going through some changes and transitions over there at Rogue News, so please excuse the construction. The news site will be updated and looking all pretty and ready to go soon enough. Also, check out our paid sponsors, RemainCom.net, RemainCom.net. Don't freak out, RemainCom. Whether you need a funding program, you need whatever the heck it is that you need. Maybe people are out to get you. You need some asset protection. Go there, go to RemainCom.net and set yourself up with these guys that can help you big time. And also check out, folks, mycbdedibles.com, mycbdedibles.com. Whether you're in a pinch and you need some CBD and you need it quick, check out mycbdedibles.com. Their list of holiday deliciousness makes great stocking stuffers. Send the gift of health, folks, and deliciousness all wrapped up in one. mycbdedibles.com. And also check out the boys over at the Watchers Trade Room. Bitcoin up, Bitcoin down. It don't matter. These guys are returning all sorts of gains while being entertained. So go over to the Watchers Trade group over at watcherstrade.io or wt.live. What.live? Check it out. Watchers Trade. And last but not least, folks, the Gadfly. If you haven't done so already, don't sit on the sidelines. Exclusive content with the Rebel Trinity, the one and only Jim Willie, London Paul, Ken Shorjan, and yours truly, backed up and run and powered, all of it powered by El Cuco himself. So check it out, thegadfly.vhx.tv. The link should be in the description box. Siege, please make sure that the links are there, buddy, so people can find it. And with that being said, Siege, what's crack-a-lackin', bro?
Hey, good morning, V. Doing great. It's Friday, heading into the weekend.
Yes.
And how are you?
I'm doing good, man. It is the freaking weekend. The weekend. It's coming around, and I'm excited. I'm looking forward to just relaxing. It's been I haven't been on doing much of anything as of date. I just it's the end of the year, folks. Trying to close on a whole bunch of deals. It's a very, very busy time for a lot of financial companies, a lot of brokerages, and me being a broker on quite a few things. It's a very, very busy time for me. So it's been crazy. So please excuse the fact that we're not here. And again, folks, most importantly, subscribe to this channel. Hit the thumbs up. Show your love and your support for us. And that's it, man. I mean, Siege, what are you going to do this weekend, bro?
Well, there's a huge heavyweight boxing fight Saturday night.
Tyson Fury and Deontay Wilder. So
I wasn't even aware of it, and I started getting text messages for some of my Fight Club friends, and they're like, Saturday night. I'm like, what's going on Saturday night? So then after I went and watched went and watched a little bit about it. It's like, I think that's a pretty big boxing match. Right.
Who do you got your money on?
I hate to even guess. I mean, I think it's gonna be a great boxing match show. I think it's definitely
gonna be a great fight. I'm gonna put my money on Tyson Fury.
Okay.
The Gypsy King is more of a technical boxer. I mean, Wilder hasn't really fought, and he's got a padded record. But he's got a powerful punch. But man, he is sloppy. The way he is, he's just sloppy. He just brings his fist all the way back out there and comes across and punches. This kid who used to play basketball and he becomes a boxer. That's basically what it is. But it's gonna be a great fight nonetheless, man. I want to see how it is. Again, if I'm a betting man, I think Fury's gonna win. Fury's got way too many technicals. Let's see how it goes. Anything can happen. Either way, it's gonna be a great fight. I'm looking forward to it. It gives me an opportunity to eat chicken wings, knock down some buds, and watch. Yeah, man, knock down some delicious brewskis. I don't know, maybe, folks. Here's Gorilla's Beer of the Weekend. If you haven't got a chance, go check it out. Amagang Brewery, great place. Check out their beer called Three Philosophers. It is absolutely delicious. Oh, nice. Belgian beer, amazing. Nice. You could even find it sometimes in certain supermarket chains will carry it, or one of those boutique shops, or even places like Whole Foods and things similar to that. They carry it. Yep. Omegang is great. great brewing company, Three Philosophers, absolutely most delicious Belgian beer you will ever have. It is amazing. I like it a lot. So check it out. That's what I'm gonna do. I'm gonna drink some Omegang. I'm gonna call a Buffalo Wild Wings. Put an order in for some mango habanero and some Asian zing. Maybe get a side of fries with that, Siege.
There you go. There you go. Have at it.
Have at it. Or just go straight wing. Have it all protein, bro. That's it. You know. Gotta watch the waistline, man. I gotta keep, gotta look svelte. Siege, let's get into it, man. Let's get into it.
Let's do it.
Housing market, man. We all wondered, what the hell's going on, right? We've all been sitting on the sidelines talking about the housing market and all the things that are happening in the housing market, right? And we have First, if you guys remember, and this is important, because mortgages, for those of you that don't know, mortgages were not made for you. Yes, correct. Mortgages were not made for you. They were made by and for banks. Mortgages were made by banks. And for the longest time, we've been sold this BS idea that home ownership is the American dream. And it's a BS idea. The wealthy folks, the wealthy people in the world, they rent where they live and they own what they rent. They rent where they live and they own what they rent. That is a far cry from the majority of Americans. That is a far cry from the majority of middle class, upper middle class, and upper class people who own where they live, or they're mortgaged to where they live, and they don't own anything to rent, really. And everything's on credit, everything's extended. But the whole entire mortgage thing, man, it is a wealth extraction scheme. It's a wealth extraction scheme. It's a scheme that is designed to keep you indebted. I love it, Siege. You know the best thing when people come up to me, Siege?
What's that?
Oh, when people come up to you, especially family members. I bought a house. No, you bought a mortgage. But I bought a house. You bought a mortgage. But I own an asset. No, you're an ass hat. And you don't own an asset. And you own a liability. What do you mean? I can borrow against my house. Borrowing against a depreciating asset is not such a good idea. But let the good times roll. Everything was all hunky-dory. We've seen the 2008 financial crash, and we've seen the damage of what that's done to the real estate market. And the same thing's going to happen again. Because we need to keep one of these things propped up. One of the three pillars, folks, apart from stocks, bonds, the other third pillar in keeping the U.S. economy afloat is the housing market. And for the longest time, we've had artificially high housing prices for no darn sense. How do you have high housing prices when mortgage applications are the lowest they've been since 1965? It doesn't make sense. How do you have high housing prices when money velocity is the lowest it's been since 1967? And in 65 and 67, folks, the population of the country was less than half. There was about 147 million people alive at that time in this country. So these were never good signs. And if you've been following me for quite some time, you'd understand that it was only a matter of time before the entire house of cards comes crashing down. Wall Street needed to crank into high gear. Why? Because Wall Street is in the game. And what game is that? It's called the game of liquidity. It's called the game of yields. You heard about the Game of Thrones? Well, I'm going to tell you about the game of yields. Everybody's trying to chase the yield. They're chasing the yield in the bond market. They're chasing the yield in the stock market. Everybody's chasing the yield. Siege, we went through this how many times with the people? How many times we went through this with the folks here, folks? How many times, Siege? When we talked about these companies that are repatriating trillions of dollars, where are they putting it?
Right back in their own stock. Why not put it back in their stock and inflate your stock price and then cash out?
Yep.
I mean, this year alone, as we've stated numerous times, this year alone, the insiders and corporations have sold over $1 trillion of their stock equity and taking their profits where they can be, taking their profits.
Exactly correct. Exactly correct. Why? Because they're chasing the yield. So buy back your own stock, make your own profits, buy back your own stock, driving up your stock price, and at the same time, getting more people to buy your stock. And at the same time, having Wall Street give you a higher valuation that gives you more of a credit leverage. It's all connected. It's a sham game. Last week, CJ, I mean, or last week or this week, people, there are some people that were lamenting in the tech sector that Apple has lost its position as the most valuable company because of their $1 trillion valuation ceases to exist. And now Microsoft is worth more than Apple at $980 billion. That's their market cap. It's a bunch of horse patootie. Microsoft is not worth anywhere near that. But thanks to the stupid thing called valuations. See, it's these stock valuations are about as real as the Forbes 100 list of wealthiest people, right? It's one of those Forbes valuations. When Forbes could look at a half-wit, a cosmetically enhanced half-wit like what's her name, Kylie Jenner, right? Kylie Jenner, one of these pop cultural Pop-Tarts, right? One of these pop culture Pop-Tarts, and say that Dumbo, who has a private label cosmetic that's made by somebody else, and now she's valued. She's valued at $1 billion. She's not valued nowhere near that.
It's insane. Yeah,
it's stupid. You look at they've actually done this. I think there was a reporter. He used the same metrics. This reporter makes about $60,000 a year, and he used the same metrics upon himself. The same metrics that Forbes used to come out with an come out with a valuation for an individual. This person used the same thing for himself. And you know what he found out?
What's that?
He was worth $450 million, CJ. Did you know that?
Wow.
CJ, I've done this valuation on myself. I am worth right now $5 billion. $5 billion. That's my valuation, Siege.
Well, V, just don't go do anything like Bruce Jenner and cutting your penis off to raise your valuation, okay?
Hey. That all depends if I can get the cover of Esquire. If I can get the cover of Esquire, yeah, then I might have to consider that. Or if they put me on the cover of Vogue, yeah, Oh my God! But it's the same thing with these tech companies. So now with everybody chasing the yield, right? The reason why I bring it up, these phony valuations are there so that more money can go to a fictitious market that's rigged in order to squeeze blood from a stone, which is called yield. And one of the ways they've been chasing the yield or contributing to the yield is for the last several years, since 2008, even to the prior to 2008, is the propped up, made up, fictitious mortgage and real estate market. And you've seen the Fed involved, where the Fed is buying mortgage-backed securities. How the hell do you do that? I mean, isn't it crazy? So now we're chasing the yield. You have a central bank that's buying mortgage-backed securities. What purpose does a central bank have in purchasing stock? Question number one. Question number two. What happens when said central bank has enough private equity stocks and shares in its balance sheet and can no longer put more on without it looking very, very suspect and bringing into question the very instrument of the fraud itself, which is the currency that this central bank prints out for the rest of the world to use? What do? Well, it's simple. You call up one of your lackeys and tell your lackeys to buy. How do the lackeys buy? 2 years ago, CJ, the Swiss central bank, what do? They bought what? Apple shares.
Mm-hmm. Right. Yep.
Like 20 some odd percent of the shares from Apple. Swiss central banks buy. Who the hell? What the heck? I could do you one better. The entire Tokyo Stock Exchange. I told you, folks, I've written a wonderful article many years ago called "The Mischief Engine" that talked about the setup of Japan and how it is basically a mischief engine created for dollar fraud. For dollar fraud. It is a vehicle of dollar fraud. Okay? So the Tokyo Stock Exchange, folks, why on earth, pray tell, does the Tokyo Stock Exchange, why is that 60% of the stocks that are in the stock exchange owned by the Bank of Japan, their central bank? Why on earth is a central bank owning 60% of a bloody stock exchange and all the private equity there? Same thing goes with the ECB, the European Central Bank.
Yeah.
Same thing goes with the BOE. Why are central bankers buying shares in private equity? Does that even make sense? 20 years ago, you told me that this would happen. I would have said you're crazy. The central bank concept is there for the issuance of credit and currency and controlling that for a country. It's supposed to be a neutral party that's immune from the winds of politics and trends. But you and I both know that is a bunch of hogwash. That is the Federal Reserve and central bank concept is the most corrupt, most heinous, most satanic concept ever created. And then news comes out. Where did the $2.3 trillion disappear to? Oh, it went over to prop up where? Well, the $2.3 trillion was chopped up and combined with mortgage-backed securities, and it was what? What do we do with it? We shipped it off to ABN AMRO. We shipped it off to RBS. We shipped it off to Deutsche Bank. We shipped it off to Monte dei Paschi. We shipped it off to PNB Paribas. We shipped it off to Societe Generale. We shipped it off to Santander. We shipped it off to Commerce Bank. There's your missing 2.3. And what are those banks are? Every single bank that I just named to you right now, every single one of them are in trouble. Every single one of them are on the verge of teetering off a cliff with one foot on the edge and the other foot on a banana peel. You could play the game all you want. You could play the game how fast and how hard as you want. But at some point, economic Mother Nature comes knocking. At some point, economic Mother Nature comes knocking. You could use as much electronic duct tape to rig the market, to make it appear like it's doing one thing when in reality it's doing something completely different that has no basis in fact or reality whatsoever. And now, folks, because the rates are starting to rise, why? The rates have to rise. Why does the rates have to rise? Because there's too many stinking dollars in the system. Because too many people are dumping dollars, which I'll get into in a little bit. Earlier this year, this is authored by Lance Roberts over at realinvestmentadvice.com and posted by our buddies over at the Zero Hedge. Earlier this year, I penned an article entitled "The Coming Collision," of debt and rates. Which discussed the 10 areas that rising interest rates would impact most directly. Number 2 on that list was housing. Number 1, folks, was definitely bonds. It was the dollar. So number 2, this is the second peg, or the second leg of the 3-legged stool that props up the fictitious, fraudulent edifice that we call the U.S. stock market. Rising interest rates affect it. The housing recovery is ultimately a story for real employment situation. Now, I want you to think about this. People think about rising rates, how it affects the bond yields, the bond market. Then they talk about how it affects the housing market. But rising rates also affects the stock market, affects private equities. Rising rates affect everything. Rising rates affects the value of your own currency. And now the Fed is backed up into the corner. Now the central banker is backed up into the corner, and he's got to play teeter-totter. He's got to play a balancing act. We're trying to keep a strong dollar because we have a strong dollar policy. And the ESF has got to run overtime. They got to work overtime because they got to find a way to hide as much of the dollar that's being dumped onto the markets today. They got to find a way to shovel it somewhere. With roughly a quarter of the home buying cohort unemployed and living at home with their parents, the option to buy is simply not available. Another large chunk of that group are employed, but at a lower end of the pay scale, which pushes them to rent due to budgetary constraints and considerations and an inability to qualify for a mortgage. Even after a decade of recovery, the full-time employment to population ratio remains well below levels normally associated with a strong economy, and wage growth remains stagnant. Those are real numbers, folks, real numbers. Not the BLS, not from the Bureau of Lies and Statistics. This is the rhetoric to the contrary. I've warned repeatedly the rising rates would negatively impact the housing market, which was still being supported by low rates. The mistakes that mainstream media and analysts made was in the assumption that the recent increases in real estate prices were driven largely by first-time home buyers creating an organic market. There is nothing organic in this artificial market. This market is about as organic as high fructose corn syrup.
About right.
It's about as organic as mercury used in vaccines. It's about as organic as chemotherapy shoved into a cancer patient's body. The mistake that mainstream and analysts made was the assumption that in the recent increases in real estate prices were driven by first-time home buyers. Reality, however, has been that market increase was being driven by speculators in the buy-to-rent game, as noted previously. Gee whiz. Who could possibly be involved? Who could be involved in that, man? Who could possibly, bro?
I don't know. Wouldn't happen to be speculators, would it?
Yeah, it's the speculators. I'll give you a name. I'll give you a name of one of these speculators. One of the guiltiest ones out there, BlackRock. Goldman's rival, BlackRock. BlackRock bought, like, I don't even know, 20, 30,000 properties. 30,000 properties, 50,000 properties. I don't even know how many properties they were. I mean, ridiculous amount of properties. 50, 30,000, 50,000. I don't even know what the number is. It's up there. And they bought that in the rent-to-own game. Why would anybody do rent-to-own, Siege? And why all of a sudden would a Wall Street firm, would a tier 1 Wall Street firm be all of a sudden interested in rent-to-own? Why is that?
Obviously because they want to make sure they keep the money coming in, keep the, they still own it regardless. They basically treat it more like a rental, and they jack the prices up. It makes it convenient for them.
Absolutely. And on the other end of it, it's a double play. Everybody's chasing yield, right? Well, what better yield? If I was a Wall Street financial firm and I saw distressed properties, and I know there's this thing, thanks to the government. Again, this is how the government screws everything up and artificially distorts everything and messes it up for everybody. And that's why this whole system needs to be purged. It needs to crash and burn to the ground. And we need to start all over. Only when you have idiots in the government that created a concept called mortgage, that allows mortgage-backed securities, that allows even your bloody central bank to buy mortgage-backed securities. When you allow regulators to rubber stamp them as grade A investments, that when you have cash-strapped, liquidity-strapped, and yield-strapped banks and firms in Wall Street, all of a sudden that are chasing the yield, and what are they going to do? They're going to buy a whole mess of foreclosed homes. Why? Because they get the title. And they'll put it up as a rent-to-own scheme. So they get money on the rent-to-own scheme, but more importantly, folks, they get that title, which they collateralize into a mortgage-backed security and various other derivatives like credit default swaps, like collateralized debt obligations. And then what they do is they package it and they sell it throughout the entire world. Now they've created yield out of nothing. So to them, having whether the person is in that house renting or not is irrelevant, because the title to that house is worth triple, quadruple, quintuple, sextuple, octoputal, whatever, to the umpteenth power times 10 to them than the actual value of the home. What do you think happens to your mortgage when you buy a house? In 30 days, your mortgage, the title of your house is chopped up, destroyed, it's gone. It's been put on MERS, the Mortgage Electronic Registration System. And once it's on MERS, you can say bye-bye to your title because it's been traded as a mortgage-backed security and or a credit default swap and or a collateralized debt obligation, and it's been leveraged to the hilt 40 or 50 times down the line. And then when Bank 29 defaults on the debt to Bank 20, Bank 20 comes knocking on your door and says, yeah, Mr. Bob Smith, we need to foreclose on you. We need the property. But I'm current on my mortgage payments. You can't kick me out. And then they pull out the sheet and showing that, yeah, you've been current on your mortgage payment, but you've only been paying the interest. You never touched the principal. You got to go. It doesn't happen. Look it up. Google it. Happens all the time. People current on their mortgage payments getting foreclosed on. Happens all the time. I know someone personally. It's crazy to think about this. Why? Because they're chasing the yield. And where does all the mortgages go? Well, the mortgages alongside with the equities and the stock shares and all that you think that you own a stock on of such and such company, all of that is held where? At the DTCC, the Depository Trust and Clearing Corporation. The DTCC. And who owns that? Well, all of it's held in a trust account called Seed and Company. And it's spelled CEDE, like you're giving up something. Seed and Company. And who owns that company? Oh, the City of London. How do you like them apples? The reality is the market's increase has been driven by speculators. As the buy-to-rent game drives prices of homes higher, it reduces inventory and increases rental rates. This, in turn, prices out first-time homebuyers who would become longer-term home owners, hence the low rates of home ownership rates noted above. The chart below shows the number of homes that are renter-occupied versus the seasonally adjusted home ownership rate. Speculators have flooded the market with a majority of properties being paid for in cash and then turned into rentals. This activity drives the price of the homes higher, reduces the inventory, and increases rental rates, which prices first-time home buyers out of the market. The first fissures of this happened in Vancouver, where Chinese billionaires were laundering trillions of dollars through the Vancouver housing market. Literally, Siege, hundreds of billions of dollars, maybe even $1 trillion, laundered through real estate schemes, not only in British Columbia and Vancouver, but also in Australia and also in Dubai with the bloody skyscrapers. All of these are engines of financial malarkey. All of these are engines of financial fraud, and the average Joe public has no bloody damn clue, and he thinks it's all legitimate. It's all squeaky clean and all kosher with a rainbow on top with a prancing unicorn. It isn't. The recent rise in home ownership rates, the subsequent decline in renter-occupied housing, maybe an early sign of rental investors, aka hedge funds. Could we stop calling these people homeowners and speculators? See, when I say speculator, you think of some guy you probably seen on like the Home and Garden channel who buys and flips houses, right?
Pretty much.
That's the image that everybody comes to that. Nobody thinks about the real dirty word here. hedge funds. Nobody thinks about Wall Street. Because you need to get that out of your mind. It's not some guy, trying to buy and flip a house here. This is a bank. This is a financial house that is buying a ridiculous amount of property in order to drive up prices, in order to do what? To chase the yield. If there isn't any large enough pool of qualified buyers to absorb the inventory, there will be a sharp reversion in prices. They don't care if the price for that house goes from $600,000 to $200,000. They don't care. Because why? To them, it's worth it. They don't care if they lose 100% of the value of the home. They don't care. Why? Because they've already weaponized. Do you get it, folks? They've financialized the mortgage. They've financialized the note, the deed, the title of that house that's already been financialized. They've made their profits 50 times over within the next 30 days of that house being on sale. It doesn't even matter to them if they lose everything. Once it's transferred to the fictitious world of derivatives, then they can do whatever the heck they want. Folks, do you get why banks hate cryptocurrencies? Do you get why they hate the blockchain? You know what the banks are doing with derivatives? All what derivatives are is crazy, various digital financial instruments with no accountability. That's all it is. It is fraudulent, fictitious, artificial, fake, smoke and mirrors, not there, not even existent, imaginary financial instruments created with zero accountability. Nobody knows who owns what anymore. You can't even do a mark to market. You want to know what a world without blockchain is like? Well, you're living in it. You see, when in a blockchain system, you can't pull these shenanigans. A true blockchain, not some. Yes, we are J.P. Morgan, and we have created a blockchain system in order to track our things. Well, who controls it? Well, we do, of course. We control the blockchain, and it's our blockchain. Well, then it's not a blockchain. You just created a ledger. A true blockchain is not controlled by anybody. Like in Bitcoin, like in, so many of the other cryptos. Monero, Zcash, Dash. Nobody controls that blockchain. It's the blockchain. You can see that the bulk of the real estate activity has occurred at price levels of homes that make the best rental properties between $200,000 and $400,000, and that is damn skippy straight. Who's buying these damn houses? Now we know. Because that's where you want for the rental. And I'm looking at homes, man. I'm looking at homes around here. The homes that are, north of 600,000, 700,000. They're just sitting. Look at the mansions in Greenwich, Connecticut. Per capita, the richest area in the whole entire country. Per capita. At one point. That was where the billionaires and the captains of industry in Wall Street lived. They all lived in Greenwich, Connecticut. They're discounting mansions at 50% and can't even get them to move. Can't even get them to move. Same thing's happening in the Hamptons. 20-30% crash in the price of houses. Can't get it to move. Same thing's happening in Beverly Hills. Can't get them to move. But those homes that are 200 to 400 to 500,000 at the most, they're getting chopped up and eaten alive left and right. Why? Because Wall Street needs it. Why? Because they need to chase the yield. Why? Because the King Dollar system's got to keep propped up. Why? Because we have a debt-based economy. Why? Because we have a central bank. Why? Because there's fractional reserve lending. Why? Because we're a hijacked operation. Latest data on existing new home sales permits and on completion show that we've likely seen the peak from the bounce in the housing activity that started in 2010. It's important to remember, as we've discussed previously, that there are only a certain number of individuals that at any given time are actively seeking to buy or sell a home in the market. Furthermore, individuals buy payments. Right? How many people Siege, can go ahead and buy a house outright cash?
Not too many.
Man, that is a very, 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 very small circle. So most people that are quote-unquote home buyers, 99.99% of them, are not seeking houses. They're seeking payments. They're looking for a mortgage. So artificially suppressed interest rates are only half of the payment equation. When home prices increase to levels that begin to price the buyers out of the market, activity will slow. It's just the natural course of things. This whole thing, the pressure cooker is on. The Fed has repeatedly noted the strength of the economy as a central underpinning for continuing to hike rates and tighten monetary policy. It's quite likely the damage from the rising rates have already been done, such as noted yesterday when Fed Chair Jerome Powell reversed his position on hiking rates and changed the language to suggest that they were close to being finished. But the Fed's change of tone may just be too little too late, as negative impacts of increased borrowing costs will respect to both auto loans and housing. Another thing that's been slowing down, Siege, you and I have been talking about for quite some time. Go drive by your local neighborhood dealership. Overflowed lots to the fullest. Ford killing models, GM killing models. Why? No one's buying it. But everything's all hunky-dory, man. Everything's all hunky-dory. And they have to do this, folks. They have to do this. Why? Because everybody is chasing the yield. Yield chasing. And why are they yield chasing? Well, these countries are quickly and quietly dumping the dollar. Over the past few months, there's been a steady uptick in the number of countries dumping significant portions of their dollar holdings. This is causing many people to worry whether or not the U.S. economy is in for a massive shock sooner or later, or somewhere in between. While American corporate media outlets either ignore the developments entirely or claim that there's nothing to worry about, the reality is that the dumping of the dollar is a process that is clearly underway. I've been talking about it since 2015, 2013, that this thing has been happening. Who's dumping the dollar? Of course, there's China, there's Russia, there's Saudi Arabia, there's so many countries, China and Japan, the two main holders of U.S. Treasury security, have trimmed their ownership of notes and bonds in August, according to the latest figures from the U.S. Treasury Department released on Tuesday. China's holdings of U.S. sovereign debt dropped from 1.16 to 1.16 trillion, down from 1.17 in July, making the third consecutive month of declines as the world's second largest economy bolsters its national currency amid trade tensions with the U.S. Tokyo cut its holdings of U.S. security from $1 trillion in August, the lowest since October 2011, and in July, Japan's holdings were 1.035, according to the latest figures. Liquidating U.S. Treasuries, one of the world's most actively traded financial assets, has recently become a trend, among others. Russia dumped 84% of its holdings this year, while its remaining holdings as of June totaling just $14.9 billion. With relations between Moscow and Washington at their all-time low, the Central Bank of Russia explained that the decision was based on financial, economic, and geopolitical risk. Turkey is also getting away from the dollar. The East is moving away from the dollar. Why? Because of the simple fact, folks, that the handwriting is on the wall. It is not only just a risky currency to hold, number one. Number two, Uncle Sam has shown his power to abuse the SWIFT system. So when the dollar's being dumped and there's less dollars in circulation, then the ESF is doing its best to sop up all the dumped dollars, and then the interest rates begin to rise, and there's all of a sudden there's issues within the negative feedback loop of the economy, and they got to go ahead and raise those rates in order to relieve some back pressure, which keeps the pressure on the derivative markets, which also puts pressure on a specific derivative called IR swaps, and interest rate swaps are becoming dangerous. And then this whole entire house of cards, folks, begin to go into a giant pressure cooker, and we have a major problem. The system, and I do mean the entire system, needs to be purged. It needs to be burned to the bottom. You know, when a forest or land or something gets so out of control, so grown over with shrubs and weeds and bushes and trestles and you name the heck, it is just a jungle out there. You have to do a controlled burn. You have to burn off those parts. You have to smolder that area in a controlled burn and wipe it all out so that fertile ground can be laid and new life can begin. And that's what we need, economically speaking. We have huge, major problems. And those huge, major problems did not go away since the election of 2016. They're still there. And unless something is done where these bad actors and or individuals and or policies that are still hobbling and preventing this country's future from going forward, then this problem will persist and we are going to head for a major, major crash. A major crash. It's not going to be pretty. It's not going to be pretty. And that's what I got to say, Siege. Folks, we're going to also do a recording over at the Gadfly. There's some juicy, juicy details that I will be discussing there. I'm going to be talking about the damn near $22 trillion missing from the Pentagon. Nobody knows where it went, but the gorilla is going to paint you a picture of where it could possibly be. And then we're also going to be talking about the insanity of a weaponized media. So go over there, and there's a whole bunch of other juicy tidbits that I'll be dropping today over at the Gadfly. So make sure you sign up for that. And most also, folks, very importantly, keep it locked here on YouTube. It's a platform that we're here. We're here as long as they allow us to be here. So subscribe, hit that notification bell, so when we're on, you are alerted. And with that being said, CJ, take it away.
You hit it?
Oh, geez, it's me.